In this video, traders are going to discuss the importance of commitment in trading. Stay tuned. Hey guys, warm welcome to you. Thanks for tuning in. Okay, so the importance of commitment in trading. It seems right, this is obvious, and you're probably like, what's this clown got to talk about commitment again? I'm not really interested. You might be hitting the X button now and flicking on to the next video of a cat pushing another cat down the stairs. But wait a second. Leave me 5 minutes of your time. Commitment in trading. If you look at a hedge fund versus a retail trader, okay, a retail trader comes along, he says, okay, suddenly want to trade Forex. I'm going to trade Forex. What is the barrier to entry? Well, sir, madam, all you need to do is open this Forex account, stick in a bit of money, and you can be a trader. Great. Open the Forex account, wire in the money. Is it there? Okay, I'm off. I'm a Forex trader. Click. Now think of a hedge fund. A hedge fund, forget about all the stuff he's got to go through to get all the money and get all that and get all the accounts set up. Now, do you think he goes along or she goes along and just goes click and makes a trade? No way, not even the slightest. Even if we're talking short term, long term, whatever, the same thing. There are multiple things that need to happen in that guy or girl's firm before a trade is made. We should do that. We should not be looking at retail trading as a fun endeavor that we can just fly in. We should be putting a commitment and sticking to it. So what do I mean by it? The importance of commitment in trading. Number one is to know your market. How many people do not know what market they're trading? They're trading euro, US dollar. They've got no clue what is affecting Europe at the moment. Got no clue what is affecting the US. And you might argue, well, it doesn't matter, it's all on the chart, and that's a very feasible argument. But do you know that perhaps something coming up has a real distinct impact on the market? Do you know that actually the price of some commodity at the moment is affecting the US because there's a crisis there? Whatever it may be. Are you in full tune with this? Do you know how the hedge funds are positioned on this? Do you know what the majority of people are positioned in terms of euro if something happens with a catalyst, a geopolitical catalyst? This is the stuff that might seem, if you're day trading and punting away on whatever, as irrelevant. And if you're doing that, then you don't need it because you're probably going to day trade your way without any strategy into a zero account balance anyway. Nothing to say is wrong with day trading, just using that as an example. But if you know the ins and outs, you're not going to get caught out by a depegging like the Swiss debacle. You're not going to get caught out by a sudden rise in interest rates because you know that people are sensitive to that, and you might have come out before the interest rate announcement comes out. Whereas normally, like, listen, doesn't matter, no one's sensitive, no one cares at the moment, I can have a small position in. I know what's driving it, I know what's fueling it. Not only that, that's the fundamental side of it, but the technical side of it. What's the rhythm of the market? What's the ATR at the moment? What's the sort of daily range? What levels is it adhering to? How does this baby like to trade? I need to feel it, I need to understand it, I need to see. Is it jerky? Is it smooth? Markets are distinct, different personalities. You stick DAX next to S&P 500, different animal. You stick crude oil next to Tesla, complete different animal. Same thing at auction and price, but a different animal. So knowing your market, committed to spending time to knowing and understanding your market. Number two, devise a plan, do your homework. I've banged this drum for so long on this channel now, and you guys are probably fed up of it. But you know the plan is where it's at, and spending the time to put together a plan and doing your homework, just like that hedge fund would do. He'd sit down, they'd sit down, she'd sit down, they'd do all the research, they'd work out what they're going to do, how they're going to deploy capital, whether risk is in the deals, what deals they're going to look for, what trades they're going to look for, how they're going to exit them, how they're going to scale it. It's a massive plan, and we should be doing exactly the same thing, but too many people aren't committed enough to do it. They just want to sit at a desk or flip out their mobile, make a trade, and know if they're going to win or lose. And you know what? If that's what they want to do, then they're probably not going to make it to where they need to be, because that's got a negative expectancy, as we know, with the spreads, with our psychology, human psychology, that's got a huge negative expectancy, and we're trying to undo that. We're trying to get into a positive expectancy. So the commitment to devise the plan and do your homework, in other words, what are my trades done, what are my prior trades done, what am I good at, what am I bad at, what is the performance, just like any proper business would. Number three, staying on track, keeping notes, making tweaks. So once you've done that and you've started to initiate the trade, this is a long period of time, by the way, guys, before you make that first trade. You think a hedge fund opens the door, rents an office, sits down, plugs into the machine and goes click? No, he doesn't. That's what the average retail guy does. So stay on track. This is the commitment to stick it through. Now, this is where a lot of people digress away and kind of go off track. And I can put my hands up and say, you know, I've made this mistake myself. You start off, you do all this work, you have a great plan, you're just going down the pathway, something goes wrong, and immediately you pivot to something else. And then immediately you pivot. And before you know it, you've made all these movements and you've not made any progress. The key here is, once you've made a plan, give yourself a time frame where you're going to stick to it. Okay, and that will mean, hey, I'm going to stick to this for 6 weeks no matter what. Worst case scenario is X, because I've defined my risk, because I want to use it as a learning process. Even if it's not a profitable strategy, it's not a powerful plan, I'm going to learn a heap from it. I'm going to know exactly what I can and can't do with the next iteration, which is where it comes into keeping notes. So you're journaling, you're making tweaks. This all requires this commitment, guys. This is where this comes in, making little tweaks and adjustments that you're allowed to, or that you're preparing for the next iteration of the plan. So all this is so important. Staying on track, keeping the notes, adjusting, making tweaks that you're going to implement in version 1.1, 1.2, version 2, whatever. And finally, not giving up on that, because you might have to go through iteration, even to see a chink of light. If you're first starting out, you're losing. So allowing for that loss with your financial, in the financials of your trading plan, knowing that at some point you can start to make some progress, and you can iterate to improve. You're now above the profitable line, and now the sky's the limit, and you can keep on improving. It would be nice if it was like that. It's more like, you know, testing this. We know what it's like, but the importance is the commitment to see it through. And the not giving up is not saying, okay, just regardlessly power on with the same thing. It's recognizing that little tweaks and adjustments to personality, to setups, to strategies. Maybe giving up means taking a break from trading for a year. That doesn't mean that you're just giving up on the whole thing. Maybe there's something different there. Maybe there's a tweak, there's an adjustment to make in the time frame. Maybe you're just too immersed in it and too stressed in it. Or maybe you need to just double down on your effort. Maybe you need to go, right, you know what, I need to do more effort on my research. I need to make sure I'm taking the right trades. I need to do more effort and make more work on myself, or do more work on myself. That's what not giving up is. Not me driving headfirst into it and just killing money and throwing money away at something that's not working. It's doing the different thing. So guys, the importance of commitment in trading. If we get some commitment, we can go through, take the time to do the things that we know will work over the longer term. And if it's longer term success we're after, it is commitment, it is putting the work in. If it's short-term success we're after, it's a coin toss. Take care, guys. See you next one. Bye-bye.